Welcome to NYSE Euronext, NYSE ARCA, NYSE Amex Options, NYSE ARCA Options webcast on circuit breakers on stocks and the impact on options. I am joined today by the always illuminating Amy Farnstrom. I also have two special guests today, the irreplaceable Paul D. Adcock and the irrepressible Bob Hill. And I'm your host, Todd Weilman. Quickly, let's get on to our disclaimer. This is only for education and illumination, and here is our agenda for today. We will be talking about the proposed NYSE ARCA rule, number 711. We're going to be talking about the behavior of equities for this circuit breaker. We're going to be talking about the behavior of an options, and we will be taking your questions. A couple of housekeeping things. To make the window bigger and easier to read, there is an icon that looks like a magnifying glass, and that will make your presentation larger on your computer screen. And also the question window is at the bottom of the screen, the chat window. Please start typing in your questions now throughout the presentation. And at the end of the presentation, both Bob, Paul, and Amy and myself will be answering questions. Remember, there's no bad questions. If you have the questions, we're here to answer them, and this is the time to do it. Now, without further ado, on to the show. We're going to start talking about the new proposed NYSE ARCA rule number 711. Paul, Bob, take it away.
Well, thank you, tantalizing Todd. So I'm sure everyone on the call is aware that the SEC has mandated the industry to adopt a common set of trading thresholds to prevent, the May 6 events where extreme movement in these individual equities in short periods of time create this, erratic behavior. So this creation that we're talking about today is called the trading pauses. So what I'll briefly cover will be the highlights of the rule, what securities are going to be covered under the pause pilot, and also when this will take place. Then Bob Hill, who's head of my market development here at ARCA, will go through some of the specifics of how ARCA will be handling not only our own primaries when they do make the pilot, but how we will act on the other primaries we have. So the brief highlights: there'll be a 5-minute trading pause, where all trading and quoting will be suspended when a security in that pilot has had a last sale that's moved equal to or greater than 10% from the highest high or the lowest low in a trailing 5-minute period. Then during this 5-minute pause, quoting to the SIP will be halted, but on the NYSE ARCA primaries, our book feed will represent adds and deletes in the book feed, so you can see the auction compromise. You can also see it on our website under the halt auction tab, which will show matched imbalances. At or around the 5-minute pause period, when it's climaxing, a resume message, which is very much the same as the message we use currently for our halts, will be sent prior to the resumption of trading, and that first print coming from the primary exchange before the non-primary exchanges can get involved with trading in that security again. The pilot's only effective between 9:45 and 3:45. The discussions we've had with the commission, we thought, having those price discovery periods really needed to be outside of this pilot. The initial trigger for the 9:45 startup is going to be trade by trade until a range is created, and also you hit the 5-minute look back. So the securities under the pause pilot, so the initial is going to be the S&P 500 stocks. 404 are NYSE Classic primaries, and 96 are NASDAQ primaries. Starting tomorrow, NYSE Classic will have 5 stocks introduced to this trading pause program, and I'll give you the names of those stocks. The first stock is EOG, Eddie Oscar George, EOG Resources. GPC, George Paul Charlie, that's Genuine Parts. HOG, Hog, it's Harley Davidson. The letter R, Ryder System. And then ZMH, Zebra Mary Harry Zimmer Holdings. Then on Monday the 11th, the balance of the S&P 500 will be included both on NYC Classic and NASDAQ. So that's just a brief overview. I think many of you have seen or heard these in some of the other calls. I thought it was important that we go through some of the highlights. So now Bob Hill will take us through some of the specifics on how we'll be handling here at ARCA.
So thanks, Paul. If you look at the chart, the slide, we have some of the behavior that we put together for how we're actually going to handle orders. And we're not handling orders. It's relatively consistent, but some things are a little bit different. In securities where ARCA is the listing market, which is not applicable just yet until we start to get until the pilot expands and we add some other securities to it, we will not be having anywhere ARCA is the listing market to begin with. So you don't need to really focus too much on that, but we do want to sort of cover it. When we're the listing market, basically we will run our normal halt auction structure like we do today. So when we halt the stock, orders come in, the orders stay on the book, new orders can come in, we run through our regular auction price formation process, reach an opening price, and then reopen the stock. When we're not the listing market, and another market center has halted the security for either a volatility halt or a regulatory halt, we're going to change around the way that we process things. The way we used to do it was basically to run a halt auction again. In this case, we've decided that the better way to do this is to focus the new orders that are coming in to the primary markets, and so we've sort of restructured how we do it. So let me give you a few examples here. So when a regulatory halt or a volatility halt has occurred, any orders that are on the book before that are going to remain on the book. So GTC orders, anything that's been put in for that day, will stay on the book. We will, however, automatically cancel anything that's sort of in transit that might have been unfilled at the time. So unfilled market orders, for example, pegged orders, things of that nature. The orders that are on the book, you can cancel. So if you want to cancel it, that's fine. If you try to cancel, replace it, it's not going to be able to work. So the cancel will go through, but you won't be able to replace it with a new order. We're trying to do this just to try to keep the process relatively clean. So what happens with new orders? If you send us a market order or any orders that are specifically marked to route to the primary market, or PO or PO plus type order types, they will be accepted. If you send a straight limit order or something that doesn't have that modifier on it, it will not be accepted in this time frame. And so you'll need to either remark that as being routed to the primary market or find another methodology for getting that. So when the halt has occurred, if it's an ARCA-listed security, basically what we're going to do is we're going to open it at the 5-minute mark. If it is a New York or NASDAQ-listed security, we are going to wait until they have reopened that security. So if it's, it might be at 5 minutes, it might be 5 minutes and 30 seconds, it might be 8 minutes, it might be 12 minutes. Okay? So we're gonna wait until that happens, and we'll basically look for a combination of their resume message, a valid quote from the primary market, and a valid last sale from the primary market. If there isn't a valid last sale, it's a relatively liquid stock, and it opens just on a quote. We have a mechanism, we have a timer mechanism that says, okay, it's good enough, we've got the quote, we'll go ahead and go after that. There is a possibility that the trading pause could be extended. On ARCA, it's unlikely for the ones that we list that we're going to do that. If it is, then we would extend it probably out another 5 minutes, and that information would be made public. To the extent that it's not an ARCA-listed security, so again, New York Amex listed or NASDAQ listed, and it's been extended, we are, again, going to wait until the primary market opens, and if we've gone past the 10-minute mark, we have the option of forcing the security to open at that point in time. In general, we're not looking to do that. To the extent that we get some more experience with this, we sort of reserve the right to look at that later on. But in general, the rule will let you do it at the 10-minute mark. In practice, we're likely not going to do that, at least initially. So when something's been halted, how do you know about it? So the halt information, when it's an ARCA-listed security, will go out over CQ and CT, and it will be, if it's a volatility halt, it'll be a quote message M, and then it is a trade condition 2, I believe, that halts the security. And you'll also see the quotes will go to 0, etc. When it reopens, if it's an ARCA-listed security, you will see a resume quote message T, and then you will see a sale condition tied to the auction that we run that'll have a code of 5 on it, which indicates that it's the market center reopening trade. That information comes over CT/CQ and is broadly published. In a scenario where we have halted due to the listing market halting, we're not going to mimic anything else. We're not going to resend out another halt message because that's already gone out over CT/CQ or over the NASDAQ SIP feed. We've already read it. They've already declared that it's halted, so it doesn't really do us much good to sort of mimic what they've done. What you will see is that our quotes will go to 0 out of that. So the quotes will automatically get zeroed out, and then you'll see things start to go from there. So upon the information upon the reopen to reopen the security, ARCA today publishes an anticipated opening price imbalance information. All this information that tells you what it looks like, where the security is going to open, imbalance information center goes out over our existing ARCA book feed, so that's not going to look any different than it does today. So you'll see that, as with any halt, that information will continue to happen. You'll see orders coming in, etc. That'll continue to happen. The anticipated opening time will be the time that the security is going to open. That anticipated opening time is at minute granularity. It's not at seconds. So you could conceivably have a situation where the security is halted for slightly more than 5 minutes because it's going to round up to the next full minute, and it'll go from there. The methodology for reopening is slightly different in how we do this. Between where we're the listing market and when we're not the listing market. If it's the listing if we're the listing market, it works just like it does today. It's our normal halt auction process. Orders come in, as I said before. We find sort of the equilibrium and open the stock at the opening time that's been published. If it's a New York, an Amex, or a NASDAQ listed security, as I said before, we will have the existing orders on the book, and then everything that's new, that's applicable to be routed to the primary market will. And then when the security reopens on the primary market, we will first, and the reason that we wait for a trade and a quote is to let the market, to let quotes actually build up. We'll let that happen first. Then we'll go ahead and attempt to execute what's on the book if there's anything that's going to be crossed up with the rest of the external market. So we'll route that in order to clear that stuff up. And then as that happens, as soon as that happens, then the gates open up and we're available for order entry again, and we'll accept pretty much everything from that point on, just as normal. One quick note, we will be having testing this weekend for firms. If you want to make it, if you want to participate in that, we'll be open for order entry capabilities. There's a memo that's about to go out on that if it hasn't already, that's sort of talking about the times and that kind of thing. CTCQ will be open. You'll be able to see the information going on there. New York will be doing some volatility halts on certain securities. They will not be open for order entry, the last I heard. They're just going to do that so they can sort of keep the controlled environment. We'll be open for order entry, but we will not be routing to New York in this scenario. We will take a couple of stocks and run through our volatility halt and our regulatory halt process, just so everybody can see what the messaging looks like, et cetera. Even though we don't have anything that's going to be live on the pilot list for a while yet, we thought it was probably worthwhile to just run through. So we will be doing that Saturday morning, and if you'd like to participate in that, we will have the firm lines open.
Excellent, and that's for options also, I would like to point out. Real quickly, Paul, when you were talking on the first slide, the proposed rule, ARCA Equities Rule number 711, we talk about the time this is going to be in place. It's going to be in place from 9:45 to 3:45. But on the slide itself, it says 9:45 to 3:35, and that it goes to speak to the trigger time, correct? There, if a trade happens after 3:35, it won't actually trigger the trading pause.
Yes, that is correct.
Okay.
So those times are open. We kind of felt like when we were on the calls with the other exchanges and also the SEC, you know, those are really the times where the market needs to find liquidity, needs to find an equilibrium, and it's also, you know, really our most volatile times, and really thought we needed to stand back and let that process take place.
That really makes sense. And so with the trade trigger time being 3:35, it gives 10 minutes for the pause, and then we'll have the last 15 minutes for wild and woolly trading.
Absolutely.
Fabulous.
We just got a note from Jen Lester as well, one of our lovely colleagues here, and she said that the notice has gone out,
Okay.
and it's posted under the Trader Updates section on our website.
Excellent. So, and that's going to be the pilot names that are going to, tomorrow, the 5 names. I see we're using some good ones. I like the hog. I thought that was in response to me, but good. I thought it's not.
It's actually Harley Davidson.
It's Harley Davidson, Amy says. Bob or Paul, anything else that has come to mind?
I think it's your call now.
Okay.
Thank you so much for contributing. We always like it when we have subject matter experts join us so that we don't take ourselves out on a limb and talk about stuff we shouldn't be. So we'll keep monitoring the questions. I see that we've gotten some equity-centric questions, and, you know, again, we welcome all questions, and we will answer those at the end of the call. So Bob and Paul have to sit through the rest of this call and listen to us.
Well, we listened to them in the first part. They can listen to us in the second part.
There we go. All right.
So if there's a trading pause that has been initiated from the equity having volatility, here we go, Amy. This is our part. So trading pause is triggered in a particular security. Obviously, if the underlying security is halted, we can't trade options on that security.
That's right. Options are derivative products.
I love that.
They do need the underlying there, and it is, as with all of our halt activity on the options platform, immediate and automatic. So there's no necessity for any trade desk or other human intervention. So it just happens right away.
Excellent. And we're usually going to be waiting for the primary exchange to start trading again, just like Paul and Bob were explaining earlier.
That's right. So there's a 5-minute pause where nothing can happen. As far as trading, obviously, during all of our halts, which are on the option side identical to, say, our pre-open phase, before opening, clients can enter orders, they can modify orders, cancel orders, You know, the imbalance feeds are available, auction imbalance, things of that nature. So people can still, you know, take care of business as far as preparing for when the security reopens and the auctions then go through an opening auction or
An
series
auction
open.
that mimics an opening auction.
Right, a post-halt auction.
A post-halt auction, which is the same thing as the opening auction. It's going to be the same procedures.
Right.
And
Right, and just like, you know, at the open, if after 10 minutes have elapsed and the primary is still not open, now the primary might open after 5 minutes, it might open after 7, 8, 9 minutes, might open after 12 minutes. It's after 10 minutes, completely the trade desk's call whether or not they want to continue to wait for the primary to open, or if they see enough liquidity trading on the non-primary equity exchanges. If there's a bid and an ask that's logical, which means it's not crossed up, there's a last sale that's between the bid and the ask, and things look like they're working as they should, the trade desk can certainly make the call to go ahead and open the options based on that information. But that is a manual process. Nothing about that is automated,
Okay.
you know, outside of the primary opening.
so it'll be up to the trade desk, and our market makers will call the trade desk and says, there's liquidity in the stock, we want to start trading.
That may
Let's
be
run
it.
this.
It may be the trade desk monitoring what's happening. You know, they are all over this stuff every morning and after any halt. So certainly this will be the standard procedure for them.
Okay, that sounds good. That sounds good. So now during the trading pause, you can obviously cancel any orders during the trading pause, and you will get an out during the trading pause.
That's right. So, and there's a few differences between the options and the equity side. You know, we accept market orders during a trading halt or during a trading pause. Clients can cancel those. If somebody sends in an IOC order, it's going to cancel back to them. We don't queue those on the option side. Really, everything that is, you know, the execution instructions that are sent, if they can be processed during the trading halt, they will be. They'll be queued and ready for the post-halt auction. If it's an IOC or a fill or kill, obviously, because nothing can happen right then, we cancel those back to the clients. If
Okay.
you have a stop order in, you know, let's say you had a stop order in to sell at $2, and now it's looking like the market's going to open well below that, that 5-minute trading pause is your opportunity to go in and modify that order or cancel it. There's no restrictions on getting out of the way.
Okay. Oh, that totally makes sense. Totally makes sense. And the last thing on cancel replace orders during the trading pause, you're going to lose your priority, correct?
Well, you always lose your priority on NYSE ARCA and NYSE Amex if you do a cancel or replace. On NYSE ARCA, we are price time, and so you know, when you do a cancel or replace, you have a new time, and you go back in time priority. So you know, that's standard procedure. That's nothing different for a trading pause, halt, or for standard processing. The other nice thing, I know that Bob and Paul touched on the fact that market data goes out on the equities during a halt. The same is true on the option side. So you can get a sense of that there's a lot of buy pressure, sell pressure, you know, by looking at the imbalance messages, and we really, you know, encourage our participants to make full use of the tools that are available to them through our ARCAbook application.
Oh, ARCAbook, and that is one of our better deals. As long as you paid for the feed, that ARCAbook is free, no additional cost.
Right. The safety charge is a standard flat monthly rate of $750, I believe it is currently, and then the feeds are at no incremental cost on top of that.
I love that. No cost. And I had one other question, and it has totally slipped my mind. So we will move on to the question time.
Well, one
Wait
other
a
thing,
second.
one other thing I did want to bring up is that, you know, one of the things that we're particularly proud of on the option side is the fact that we give, on any opening, whether it's a post-halt auction and sweep or an opening auction and sweep, we do have caller protection. We've talked about that in past webinars, and that's something that's in place. So even if the market opens after a trading pause and the volatility is still extremely high, and the stock's going to make the underlying is making a significant move once it reopens, just understand that we have those caller protections in place. And we've got a lot of information about that. You can go to the website, and I know you've blogged about it. There's a very good webinar. There's some client notices out there that people can reference in terms of that. And I think that's a really good feature, especially if we're talking about times of high volatility when these trading pauses are likely to occur.
Right. You did remind me, when you said buys or sells, we're in this market conditions where we're to the downside, but this can happen, this 10% move in stock, to the upside or to the downside, and it's nice to remember that, as long as it happens in 5 minutes, whether the stock's hopefully going to the moon.
Okay, so that I've said my piece, and so if we want to move on to question time, I have a question here. Can we get a copy of this slide deck? Yeah, absolutely. There'll be a slide at the end of this presentation that tells you what the links are on the websites, so that you can go ahead and get yourself a copy of this. It usually, takes a day or two to get posted. You can listen to Bob, Paul, Todd, and I at your leisure, over cocktails or at poolside over the weekend if you want, because the entire webcast will also be available. But certainly you can get a copy of the slide deck there as well.
Right.
We have another question, and Bob and Paul, this is directed towards you. We have NASDAQ had stated they will queue IOC orders during a pause, and you will be able to cancel an IOC order during the pause. Will NYSE behave the same way?
Well, Jason, that's Paul. That's a great question. I guess when I heard this 2 days ago, I was pretty concerned about it, as you can imagine. So I had head of my trade support desk here in Chicago speak to theirs, and that is not the case. They will be canceling back any IOC, ISO orders that are sent after the pause is in place.
Phew, that's a good. That was a mind bender for me. I was like, oh, geez.
I like that.
Good. Okay.
We here at NYSE Euronext, we do our webcasts for our own exchanges and for other OA market centers, and y'all are welcome.
Oh, but that's good. And just in case folks are wondering, we do follow exactly that same processing on the options side. So good. The next one is, what is the difference between a trading halt and a trading pause? Or are they the same thing? Bob Hill?
They're functionally the same thing. So there used to be two kinds of halts. There was a regulatory halt and a non-regulatory halt. Now we've introduced a trading pause, which, even though it isn't from a legal perspective a regulatory halt, it looks and acts and behaves just like a regulatory halt.
Okay, great. That's a good clarification. An options question here. What option quotes will be published during a trading halt? Todd Wildman?
There will be no actual options quotes published during a trading halt. Everything goes to zero. So you will see no quotes during a trading pause.
Actually, it's zero bid at 99.
Oh, zero bid at 99.
You're right. You're right on the bid side?
I'm right on the bid side, yes. So you will see the zero bid at 99. Good question, though.
Anything different regarding market maker obligations that we need to know? Well, from the options side, no. The requirements for opening an options series is that the underlying is open, that it's, in the morning past opening, during the intraday, it would be after we get the unhalt message from the primary or the trade desk opens the issue. And then to open a series, you need a legal width quote. So as far as any market maker obligations, You know, we don't require an LMM to be present or a specialist. You've got a 1-up minimum size if you want to quote. If you want to participate on the open, you need to send in a quote that's, you know, within the market. You don't have any obligation to. You can certainly send in a wide quote, but just understand that you're not going to participate if you don't have the competitive quote in. Do you guys have anything to say in that regard on the equity side?
That was anything.
Nope. No comment.
And it's interesting, I'll say one other thing, because obviously trading halts once the underlying security has halted on the option side. But now, if you have a trade-in with one of our floor brokers on one of our 2 exchanges, Amex or ARCA, if the trade has been released by the trading official, the trade will be able to be executed and put on the tape. But the order will have had to be released by the trading official for it to actually be a good trade. So, what I'm saying here is, if the order went in for a floor trade, open outcry, and the broker was able to get the trading official to release the order, then the order will go to the tape. If the trading official hasn't released the order and the market's been halted, then the order will not go to the tape, and it won't be a consummated trade.
Right.
So just realize that.
Very good. We have a question, will the halt behaviors just discussed for options apply to all OPERA member exchanges? I'm sorry, I can't speak to that. I can tell you what you want to know about NYSE ARCA and NYSE Amex, and hopefully we're doing a good, thorough job of answering those questions, but you'll have to go to the other exchanges for other questions. I apologize. I don't have that crystal ball in front of me. So we've gone through all of the questions that we've gotten so far. I think maybe we'll go to the next slide and finish up here. If you do have any last-minute questions, please go ahead and send them in. We will take the time to answer them.
And if you have any suggestions for future webcasts, anything that you would like to know about what's happening on NYSE ARCA or Amex options exchanges, please send Amy or I an email, and we'll queue it up as a topic. We're always open for suggestions about what you would like to learn about, because that's why Amy and I are here, to make your trading easier and better on NYSE ARCA options and Amex options. So if you want a copy of this webcast, go to our website, NYSE.com. Go to Futures and Options at the left side of the page. You can either pick NYSE Amex or NYSE ARCA options. Go to the overview. There will be a tab, Education. Hit the Education tab, and you'll see this webcast right there, and it will be online by tomorrow afternoon. Amy, Bob, Paul, it's been so enjoyable.
Yes,
Yeah, let's do it again.
Thank you very much, you guys. It's been really nice. And hope everyone out there that we answered at least the majority of your questions, and don't be afraid to give us a call. Obviously, also, we've got some excellent personnel on the trade desk. Brandy Patterson on the options side. We always like to give a little shout out to Brandy. And since Bob and Paul are here today, I suppose we better mention Clancy, right, Paul?
Yeah, Clancy Psycho, S-I-K-O.
Yep. Absolutely. Clancy Psycho. Give him a call. He loves talking about equities. All right, everybody. Be well.
Be safe. Goodbye.
Bye-bye.